Welcome to This Week in Intelligent Investing, where we examine timely and timeless investing topics to help you become a better investor. Enjoy authentic, unscripted discussion featuring Phil Ordway, Elliot Turner, and other thought-leading investors, brought to you by MOI Global. And now, here's your host, John Mihaljevic.
Welcome, everyone, to a new episode of This Week in Intelligent Investing. Really looking forward to another conversation and to learning with and from Elliot Turner and Phil Ordway. Phil, we're going to start with you first this week. Please go ahead.
Thanks, John. I thought this week I'd talk about something I see a lot in investing, and I've been seeing it a lot in everyday life. It's something that I've been fighting and struggling with for years and hopefully been getting better at. And that's this concept of holding two competing thoughts at once. So you may or may not be familiar. There's a pretty well-worn cliche or quote out there that's often attributed to Einstein, but I don't know if he ever really said it or not. But it's that, basically the mark of a well-functioning mind is the ability to hold two competing thoughts at once, or some derivation of that. And that's all great and that's fine, but it really is interesting how many different psychological biases get wrapped up in this little concept, right? I mean, it's really kind of a pure form of anchoring psychologically, right? And I see it so often where people get really hung up on the first thought that captures their attention, or that elicits some sort of commitment or response from them, where they really get stuck on an idea. I actually first came across this topic doing crossword puzzles, which is something we'll probably talk about down the road, like, little mental tricks from other games that you play, like chess or bridge or poker or something like that. But in crosswords, like, the real trick to doing them quickly, if you want to do it in a competition or something, is not committing to an answer until you're really sure about it, right? So like the best crossword solvers in the world have this amazing ability to hold two competing or three or four competing answers in their head at once and check to see what makes sense with the cross. And so the same has to be true in life, right? And you see this almost every other day, right? I mean, I've made just a short list of places I've seen it. I mean, certainly in politics, where someone says, well, candidate A has been terrible, or candidate A is from the wrong party, so I would vote for just about anybody else, no matter how terrible it is. I see it all the time. Hans Rosling wrote that great book, Factfulness, where he wrote a lot about this. And Steven Pinker and others have written about this too, where there's been, very clear, demonstrable decline in things like violent crime, or, global poverty, or childhood mortality, or that sort of thing. But then there's like one bad year and people can't get it out of their mind, right? I mean, it's like, it's possible for there to be a bad year and an uptick in violent crime and still be a great trend or a great pattern over time, right? I mean, media bias, right? I mean, it's entirely possible for media sources to be inherently biased and be a useful source of information and still provide value, right? I was thinking about this in the context of the vaccine rollout, which we were talking about. I mean, the vaccine rollout has been both a complete mess and a total triumph of science, right? I mean, I think if people would stop for a minute and think about what's actually been accomplished over the last, call it 11 months, it's pretty astonishing. But then they get hung up on, all the things that have been horribly flawed and totally imperfect, and they can't get over. And the same is true, in my opinion, of the pandemic response overall. I mean, there's some things that have just gone horribly wrong, and there are some things that overall have been quite good. And I guess if I had one thought that's come out of the last 12 months, I just keep coming back to this concept that I'm surprised it wasn't worse. But anyway, so back to investing and this idea of holding two competing thoughts at once. I mean, this has really caused a lot of problems for me, and hopefully, if you're explicit about it and train yourself out of it, you can get better at it over time. I mean, some ways it's tripped me up. I'll often have this response that, okay, person A told me about an idea, a company, an industry, whatever the case may be, and I'll either think person A is an idiot, therefore the idea must be terrible, or I'll think person A is a genius, and therefore the idea must be fantastic. And it's possible for person A to be an idiot and the idea to be totally valid or worth pursuing, right? So, I mean, those are the two competing ideas. Just because the idea came from a source, the person's an idiot, does not mean that the idea should be disqualified. It sounds obvious when you say it like that, but I'm always surprised at how often I fall prey to both sides of that, right? Company A, seems like a good possible investment, but the price has gone up too much, so I've missed it, right? I mean, it's entirely possible. It's almost more likely than not in many cases that the price has gone up and the opportunity is now better. So not only have you not missed it, you have to hold the idea in your head at the same time that, yes, I have missed the initial move up in price, but that isn't necessarily what you should be focusing on. It's entirely possible that something looks expensive and is still a great investment in the future. So those are two competing ideas, I think, that a lot of lowercase or even uppercase value investors hold in their heads, is it has to be, the exact bottom. It has to be dirt cheap. And that's what makes it a great investment. And that's just not true. Something can be more expensive than it was and still be a great investment. Something has not happened and therefore it's bound to happen in the future, or something has not happened and therefore it's due to happen in the future. I mean, these are misapplied odds, or some version of the gambler's fallacy, a misunderstanding of randomness and streaks. I just started reading a great book. It seems really interesting so far, but I did just start Ben Cohen's book called The Hot Hand. It's about understanding streaks and randomness. Particularly it pertains to sports research, but it's really interesting so far. And you see this every day where somebody thinks, oh, I rolled, a 3 twice in a row, therefore I'm due to get something else. Or I flipped a coin 3 times in a row and I'm due to get tails because I got heads all the first 3 times. That's not how it works at all. And you see this conjunctive fallacy all the time in independent events. I think maybe the biggest one of all is, I'm a value investor, lowercase or uppercase, however you want to define it. And growth, momentum, technical elsewhere can still be a valid framework. Maybe not for you, but in the world, it still has its place, right? So I just can't reject enough this notion that it's an either or kind of thing, right? It's either value or growth. I mean, there's just no dumber debate out there. And so I think the more people can get used to holding these competing notions in their head like that, the better off they'll be and the fewer mistakes they'll make. And particularly for me, at least, it's mistakes of omission, right? Things where I knew enough, I knew better, I had all the tools at my disposal to act, and I didn't because I was just struggling to hold 2 competing ideas in my head at the same time. So I'm always trying to pause and think through explicitly, good old-fashioned system 2 thinking, and say, wait a minute, am I doing something here? I need a second set of analysis here. Am I doing something here that requires me to hold 2 competing ideas at once? And am I failing to do that? Because a lot of times it's so obvious when you just stop to take that step and say, A and B, they may seem at odds with each other, but both can be true at the same time, actually. And if you just stop to do that, it's really made a huge difference in how I've approached problems and the number of mistakes that I've made. So with that, I'll open it up to you guys. John, Elliot, what do you guys think? Are there other good examples? I know Elliot's a fan of this topic. We talked briefly on it. So what other good examples, or what would you add to this?
Yeah. So, I mean, it's something I've thought about a lot, and I'm going to have to tie it to Twitter, both the platform, the company, and Jack Dorsey. Because, it's something that I've believed in very strongly myself. And I've contemplated this topic called an ode to nuance. And I think a lot of it boils down to viewing the world, having a worldview that embraces nuance and could parse through, 2 competing ideas and hold both at the same time, right? Exactly what you're saying. So, if you wanted to describe it in one word, that word's nuance. And part of the reason I think so much of the market has a hard time understanding and appreciating Jack Dorsey is he is one of the most nuanced thinkers of our time. And the irony of it all is you can't boil Jack Dorsey thoughts down to 140 characters. And he's the gentleman who brought this world Twitter. But when he speaks, so much of the time, he's holding 2 competing ideas and is able to see the future of how the tensions resolve, because there's often an inherent tension to it. And so Twitter specifically as an investment, I think so many people are wrapped up in this idea of, my God, Twitter's missed so much opportunity to execute. Therefore, they're definitely not a good investment going forward. And it's if you could embrace the idea that, hey, actually, they've missed a lot of opportunity. They've messed some things up, but I see where they're doing better. I see how they could understand their purpose and, appreciate that while there is a bad in the past, there's a path and a situation that's better. It's not easy mentally to hold both ideas at the same time, and I think it's a struggle. But I think it really does boil down to nuance. I think a lot of the world wants things to be in bite-sized nuggets, wants things to be stated in the most black and white possible terms. They want opinions. If you look at who goes on CNBC, it's not the guy who's like, well, I don't really care if the market's too expensive or too cheap now. I'm interested in this stock and, I'm still finding some good ideas. Like, that's boring. The stuff that gets presented in media is like a million really strong opinions that are just black and white worldviews. And so, I think there's a huge advantage in being able to kind of operate in a way where you don't play that game. You don't think that way. You just kind of ignore it. And whether that be both narrowing the funnel of these really strong opinions to only certain areas that you think are consequential to you, or whether it's like only really acting on certain kinds of, narrowing the funnel on what you act on. So whether it's on thoughts or in actions, one way or another, being able to parse through this need for everything to be so strongly stated. I think it's interesting. I think it's a good place to be. And I find a general allure to situations where there is nuance, where there is an opportunity to hold two competing ideas at once. And, I think back to like the 2004 election with John Kerry, where he was like accused of being a flip-flopper. It's like, that's not a bad thing. That's kind of a good thing. I think there's just an aversion to that kind of thinking. So I love it. I love the topic. I think it's incredibly important. And I like I have a very strong opinion behind the idea that nuance is awesome.
Yeah, context is obviously crucial into all of these things. And that's why if you're trying to boil it down to talking points or, even just simple frameworks, that's where you often get to this concept. So I love the idea that it's an ode to nuance. That's a phrase that I'm going to have to steal from you and start using, because that's exactly right. I mean, the other thing I always tell people that are just trying to start out in this world is that in investing, almost everything that matters seems like a paradox or can be, almost contradicted at times. And so you have to get used to it right away that, all the important ideas, all the big ideas that you have, it's going to be, if you're thinking about them correctly, you're going to be able to poke holes in them. And you just have to get used to holding, two competing ideas in your head at the same time and do it as quickly as you can, because there's no way around it.
Yeah, there's that famous Harry Truman quote, like, give me a one-handed economist, because, every economist is like on the one hand, on the other hand. It's like, that's not a bad thing. We're facing, especially in what we do, I think this is a recurrent theme, but we're making decisions where there's no knowable true answer to things. Like, we are operating where, we're facing imperfect information in an uncertain world, and we're trying to like actually put our tails on the line in the face of that. And, if you don't approach that with nuance, if you approach it with, to me, like nuance and humility are tied at the hip in that sense.
They definitely are. Yeah. And you raise another good point there. And I've given this advice or had this conversation with a lot of people, particularly recent college graduates or business school students through my class, where they're trying to navigate this world. And often we come back to this idea of, how do I pitch an idea? And there was a book written about this recently, How to Make the Perfect Pitch, I think was the title, Paul Sonkin. And it's a really important topic, actually, because the ability to communicate your ideas up the food chain is absolutely critical. And then as you make that switch from idea generator or recommender to actually owning the decision, that's a really tricky balance too. And I've thought long and hard. I mean, I used to work with someone who said, I'll make up my own mind. I just want your deepest conviction. I want your enthusiasm, whatever. And that, I understand that has a lot of merit. I also saw it abused a couple times pretty badly because, somebody was just trying to game the system. It was late in the game, so to speak, and they were swinging for the fences. And so it can get pretty dangerous from the portfolio manager's perspective if all the ideas are being spoon-fed to you in a certain mold or framework for the benefit of the pitchee. or the pitcher, I should say, it can just get difficult. I mean, I think that's where, the best interviewers, if it's possible, have always said, just tell me what you own. I don't need to hear, some long detailed pitch, or tell me what you own and why. And if somebody doesn't own anything, I guess that's a whole other issue. You have to work around that. But that just cuts through a lot of the noise, because as any sort of portfolio manager, investor, decision maker, you're always going to have to have competing ideas at the same time. And you have to find some sort of framework to weigh the pros and cons and the trade-offs and all the unintended consequences that are inevitably going to come about.
I mean, you mentioned it, Phil. It's really that Scott Fitzgerald quote that the test of intelligence is the ability to hold two opposing ideas at the same time and still retain an ability to function. And I feel like it applies to investing in a huge way, because I can just go through my portfolio and I have opposing ideas basically for each of my investments, where there are pros and cons, and ultimately the ability to function means being able to decide, is this still a good investment, even though there are some things that kind of you want to keep an eye on that could end up being concerning, or could actually change the thesis entirely. So I encounter this all the time when it comes to investing. I mean, one sector as an example that I think I've struggled with, but I'm kind of gotten around to a decision there is banks, where I feel pretty strongly that what banks do is basically a commodity, the business of money, and that fintech is going to render it a commodity in a lot of ways, where you're going to have apps on phones like Revolut in the UK kind of amassing a lot of assets, and then banks might be on the back end, but maybe not earning as much as in the past. But on the other hand, banks have been very cheap, which makes me take note. And also I have the view that long-term interest rates are likely to rise, and everyone tells me that would be wonderful for banks. So it's really been weighing these kind of opposing ideas in my mind and coming to some sort of a conclusion, because these stocks will do something. They'll either perform or they won't. But there will be some consequences there. Other examples, I mean, just often concern about the macro situation, but then finding things on a micro level that I get really excited about. How do you kind of balance that and still are able to function? Or if you think about the political dysfunction that we've seen, and then you still have a good economy somehow in a lot of ways. Or one of my favorites, all the money printing we've had going on, and yet opposing that is kind of the deflationary impact of technology. So what will happen? Are we actually going to see inflation? That's a big question, but there's definitely opposing ideas here. And I think, we really need to stay humble and kind of not buy very much into just one set of ideas. One area is like cryptocurrencies, where you have Charlie Munger basically saying this is complete nonsense. And, I happen to agree with him, but I'm trying to stay humble as well. But I feel like, the conclusion there for me is I don't need to do anything there, and so my opinion doesn't really matter. I have other ways of investing and making money. So maybe sometimes if it's really too tough, then you just kind of remove yourself and move on. So that's my take.
So do either of you guys have a good trick other than the one I mentioned, which is I just make this really dedicated, explicit effort? It's one of, a handful of things that I just kind of run through in a mental checklist anytime something like this comes up, any sort of topic, right? Whether it's investing related or not, I've just kind of made it a habit to say, all right, stop, actually engage your brain here for a second and say, are there two competing ideas here that I'm struggling to hold in my little brain at the same time? And that has helped me avoid a lot of problems. Do you guys have any other tricks for engaging this sort of thought process so that it becomes second nature and kind of hardwired in?
Well, I'd point out that your trick is actually two tricks, not one. First, it's self-awareness. And the second is you make an explicit exercise out of something hypothetical. So there's two tricks in there. And I think they're both extremely helpful. I also, personally, when you back in the day faced with really tough decisions, they'd say fold a piece of paper in half, which we, never use paper for anything anymore, and write pros and cons on each side, right? And I think John basically said it, how on each investment, he knows both the pros and cons. And it's like, when you think about that, what that means in the market, I mean, if anything existed without any cons, it would probably be priced that way. And there's not really much opportunity there. So, to be aware of both the pros and cons, to be, aware in yourself of whether you're seeking out both sides. I can't think of anything more perfect than that in terms of embracing nuance. I also think it's helpful to kind of narrow what you speak to. I feel when I was younger, I was very willing to give an opinion on everything. And I didn't necessarily have an opinion, but like anytime I would be asked about something, I would give an answer that was an opinion. And I've been, I think saying I don't know a lot of times is, the ultimate way to truly have that. Because I don't know doesn't mean you don't try to know. It's being self-aware that you don't truly have enough information to give an opinion. Therefore, it starts your process of inquiry and discovery.
Yeah, that's a great point. I was very guilty of that for sure. And I think it's natural for people that are either inherently opinionated or just really eager and trying to jump in there and contribute. And if you've done a lot of thinking and reading, I mean, you see this a lot when kids go off to college or something, right? And they come home after that first semester and think they've acquired all the world's knowledge in the first 3 months or something.
Guilty as charged.
Exactly. Yeah, I was definitely guilty of that. And I've tried to wean myself off of that problem over the years. And I'd have to leave it to others as to whether I've had any success there. But yeah, I've always tried to tell people that I don't know, but I'll find out is the right answer to a whole lot of questions.
Well, at least for you guys, it's in the past. I feel like I'm still struggling with that.
No,
hey, it's a work in progress, John.
yeah, for sure.
But I'll just say maybe to end this segment, I mean, if you look at a lot of what's happening in the market right now with companies that are losing money but have just appreciated tremendously, if you apply that to opposing ideas concept to those investments, I think a lot of the investors in those companies are not actually doing that because they're just taking the idea that these are great businesses, they're growing fast. But on the other hand, they're not really looking at the idea that, the stock might be quite cheap. And so the business continuing to perform may not actually result in great investment performance. So that would be something where, folks that are looking at these high flyers could maybe add that opposing idea and see where they kind of land. So let's move on to Elliot for your topic of the week.
Sure. I want to talk about something I'm not exactly sure how to name it, but what I'd like to get into is a mental model for porting knowledge, ideas, and accumulated wisdom from one perhaps investment to another, or one idea, one domain to another. And I really do want to keep it to the investment context. And I think the best way to start the conversation is to illustrate a couple examples. So, apologize again for hammering on some of the same stocks. I'll be sure to point out one where it didn't work quite as well, but it was interesting. How did I get to Roku, and how did I get to LiveRamp for that matter? I was doing a deep dive on the trade desk. I was learning everything I could know about the trade desk. I was speaking to people in the industry. I was reading, all the trade publications relevant to online digital advertising. And, as I was working on the trade desk, LiveRamp kept coming up. At the time, they were just a subsidiary of Axiom. And, specifically, Roku kept coming up in interesting ways in terms of both the personnel they were hiring to build out their advertising infrastructure, and the steps they were taking in advertising, and the way companies were viewing the opportunity to give and commit budget to Roku. And so, my work on Roku didn't start as me saying like, oh, Roku is an interesting company. It was just an outgrowth of having done a whole lot of work on the trade desk, which, I should point out, I had a very brief, very small position that went well, but not, like compared to what the stock did. It was basically meaningless, inconsequential. It was tiny. I never truly got conviction in that idea. But this idea that working on one thing could inform something else is really important. And so one of the things I was introduced to as well is not just might it be important in like, approximate cause for where you go next, but 10 years forward, if you start keeping track of and start, building files that are what I'd call not specific and not generic, but timeless, that are pieces of wisdom that could accumulate. And I'm thinking specifically, you want to pay attention to really good operators and people and think about where they go next, right? Where's their next move? If you've had a really good experience with someone at one of the companies you're invested in and they really kind of stand out as a shining star, pay attention to what job they take next if they do take a next job. Stuff like that could be really interesting, could be really powerful. I don't think I've been around doing it long enough to definitely get there. But someone like Stan Chia going from Amazon to Grubhub was a really interesting hire for Grubhub. And, it's something that you could pay attention to as an investor if you're aware of the people and personnel behind it. Understanding who are key players in industries, who as companies, like what pieces, pay attention to what people say they do or don't have in one area and think about it elsewhere. One investment that I ended up in that didn't go quite as well. Sorry, the kids just got home and are quite excited by the weather. But one investment that didn't go quite as well on that front, my investment in Walgreens was informed by my research on Teva pharmaceuticals, where they specifically highlighted the Walgreens Boots merger as giving the kind of scale and potential to wring even more margin out on the generics, which is really where most of these players make their profit pool. And so that was interesting. That led me down a hunt that I hadn't expected to go on when I first started there. So I really look for these kinds of things. I try to pay attention to them. I've made it an explicit part of my process where, back to that point when we were talking about holding two competing ideas about, both self-awareness and, being explicit. I make it a point to ask myself a question. Might there be an angle unrelated to this company that I'm learning about right now where I should be applying that knowledge? And you'll see when you start doing that, it starts happening time and time again. And I think you could run through a list of your portfolio, run through a list of the companies you've worked on and be like, oh, I should have been making the connection between what I learned about, online marketing in like Twitter and applied it to some of the things that do or don't work for like Angie Home Advisor, right? So yeah, that's the general point I'd really emphasize. I don't think enough people do this sort of stuff. I think a lot of people focus on, they'll pick a company to do a deep dive on. Perhaps one trick to get around that is instead of just focusing on a company, take one step higher in your work and focus on an industry and look at all the profit pools in the industry. Think about how those profit pools are divided and who creates the most value for their stakeholders in their ecosystem. So try to think about how you could incorporate that into your analysis and how that might lead you to kind of alter your process, if ever so slightly, to make more knowledge that's buildable, that compounds, and that's inevitably portable to you as an investor. It's kind of like, it's entirely derivative of, Charlie Munger telling us to use mental models. There he's speaking to take the big ideas from different domains and, understand them and know how to apply them. But that could be, I view this as like the micro version of that, and mental models is like the macro version. And so, just curious how you guys see this, how you use it, and anything else that you might want to riff off of.
Yeah, it's really interesting. This topic probably doesn't come up enough unless it comes up in the context of like a bragging kind of expose into somebody's research project. And I think it gets pretty silly, right? When it becomes a contest about like how much you've done in this work. And so I don't have a great answer as to what the single best way to do this is. So I can describe how I do it, and then I'd love to hear what you guys do. I mean, I kind of have a multi-pronged approach to it. So I have a digital and then a physical process to try to capture everything that I'm figuring out and everything I'm learning and everything I'm reading, and then make it searchable and sortable, and so that I can go back through it. And it's funny, when I first started this effort, this was 14 years ago now when I first started in the industry, and I was printing out all this stuff and I was keeping these copious logs, and I actually kept a notebook where I wrote down literally exactly what I read every day. And I did that for years, and my old general counsel made fun of me, like, "What are you doing? You're never going to go back and revisit this stuff." And I'd keep literally, if I missed a week of newspapers or something, right, I'd keep them for however long it took. And sometimes I wouldn't circle back to them for months, or I'd keep just yesterday, I was cleaning out old trade publications, some insurance industry stuff, where I wanted to, go back and revisit it. And I've found that it's just probably the single best learning tool I have is to read something once, file it away so that I can access it, and then go back to it months or years later and see how history actually developed against what seemed probable or certain even at the time. So it's really worked wonders for me. So anyway, I keep a huge repository of stuff online. It's been great now because it's all just on the cloud, and it's a lot harder when I had to plug in a physical flash drive and move it around with me. But I just went in and double checked, and this really only encompasses, some of this stuff would go back 10 or more years. Most, I guess it really did start back then, but I'm up to, I have a 2-track process. So to Elliot, your point about people and things that you're tracking. So I have one subset of folders that's around people, specific people, themes, categories of research. So not pertaining to a specific company per se. And in that subset of file folders, I have 6,747 files in 95 individual folders. And then if you go to the company side, so this is something a little more specific and actionable. That's 14,537 files on 881 individual companies. And I've learned over time that sounds really cool and impressive and is absolutely worth nothing. And so I've learned to try to really winnow that down and really focus more time on the best things and less time on everything else, because all the good ideas and all the good returns are just a tiny fraction of each one of those file folders. So yes, you need to turn over a lot of rocks. And yes, I would suggest that anyone starting their investment process go through that and really try to build it up. But you have to be mindful of the fact that there are vastly diminishing returns. The other thing I do is I take just a ton of notes. So beyond the old reading log that I mentioned, I keep a very detailed, very up-to-date log of everything I'm thinking, reading, and doing. And it's marked up, it's color-coded, it's got little sticky tabs on it so I can find it. It's explicitly dated. Anything that goes in there has got a date attached to it, so I know when I wrote it down and what I was thinking at the time. And that contains everything, right? Books, company research, notes, people, conversations. And that's enormously helpful to be able to access that and go back to it. And I do keep that actually physically. I've messed around with all sorts of digital solutions there. And I do keep some of those files that I mentioned earlier that are digital. I also keep, when I'm reading them physically, I'll keep a printout in a file folder for certain things. But I've tried to get away from that. It just became overwhelming. Once you move offices once or twice, you kind of get sick of. I had more boxes than you could imagine. So anyway, that's the process I've used, and it's really helped. So to Elliot, your point, I mean, when I would think about a company or an idea, a research process, a topic, and somebody, or to your point, when an executive that really knows what they're doing moves from job A to job B, and you've got a set of notes from a conversation you had with them 7 years ago, which has happened to me more than once, it's probably happened at least a dozen times, it's absolutely invaluable to be able to put your hands on that kind of information relatively quickly. And I would highly recommend it to everybody.
Yeah, I'll jump in. I mean, what I think about when Elliot, you mentioned porting mental models and concepts from one investment to the next. I kind of really think about investment setups that have worked well for me and that might apply to something I'm looking at in the present. Like Elliot, you talked extensively about the post-hype sleeper setup. That's just one example. There's a lot of setups that I've kind of internalized that I look for. So that's really what I'm thinking about for this topic. One caution that I would mention is to not overfit past successes to current ideas, because I've made mistakes by, having a really big success, taking that as a mental model and then going around looking for something that's like that. And but when you try to kind of fit that onto something, you can overfit and then actually make a mistake. So as long as you kind of stay objective and have a bunch of different setups and models to work with rather than just a hammer, I think that's a concept that's worked really well for me.
I'm so glad you said that, because that's basically the part I left out of my prepared spiel, which is that's really important to me as well. Reasoning by analogy, understanding similarities from one situation to the next. There will be times I think, it's only possible to build through experience. I don't think I could have done this a decade ago. But like when I look at Twitter today, I'm like, this is exactly like my experience with PayPal in 2015 through 2017. And I could understand, the elements and draw the parallels, but also with self-awareness, hopefully could point out, where there are true gaps in the story, right? So you don't want to get, like you said, too far down that path. And I think it's extremely important. I think you start getting familiar with spotting these kinds of patterns and understanding them. And it gives you, I don't think it gives you answers, it gives you questions. It leads you to ask the right questions and try to explore the right angles to the story side of investing, and to try to understand things in a different dimension. So thank you for saying that, John. It's so true, so perfect. And yeah, Phil, that is really impressive how diligently you've taken notes. I aspire to be that good with note taking. I started with Evernote and was really, really good for a long time. And my experience with the product got clunky. So I waned in my enthusiasm for note taking. And I since picked it back up in, really just a more fragmented way. I feel like I need to explore like Notion or Roam, these ideas that inherently are built for drawing connections, or these platforms, not ideas, these platforms that are built for drawing connections and threads between ideas and files and concepts and all that. That's, I think, how my brain works and how I hope to keep building muscles for it to work better down the line. But yeah, I mean, that's a superpower, Phil.
Yeah, well, I mean, let me kind of similar to John's caveat. I'll push back on it because as much as it's worked for me in some regards, I do think it comes with some significant drawbacks, and I think it gets really ridiculous when you start having a measuring contest about I read more than the other person, and so I'm a better investor or something, right? I mean, I've seen the downfall of it where I'm so interested in learning everything there is to know about an idea or a company, and I'm so self-absorbed and obsessed in my own little process about cataloging it, all this beautiful knowledge that I'm accumulating, that the world just passes me by. So I think there's some happy medium for most people between the type of person that we probably all knew in school who would sit in the front row and take the most beautiful handwritten or typed notes that were color-coded and indexed and could serve as a second textbook and would get a really good grade on the test and then be totally useless in the real world and couldn't do anything other than parrot back what was on a multiple choice test or something. And then at the other end of the spectrum, there's the gunslinger who never writes anything down, never pauses to actually pursue kind of a structured process that's repeatable and just makes decisions on the fly and is always shooting from the hip. And that doesn't, I mean, they both have a lot of merit. I don't fall on either extreme. And I do kind of actually try to force myself into the middle, because there are times where it's just not worth it to be as diligent as I have been in some cases in the past, to take the notes, to do the reading, to pull the trigger on something needs to be done quickly, right? I mean, so that's where it's just a judgment game. And that's where, when you start coming down to automated decision making in a lot of fields, if it truly is repeatable, then yes, it can be automated. But where there's judgment involved, I'm a little more hesitant. And so I would just caution everybody, like, look, I don't think it makes sense for most people anyway, to either be the super goody two shoes in the front of the room taking a ridiculous amount of color coded notes for its own sake. And I also don't think it works for most people to be the gunslinger who's making decisions off the cuff. I think for most people, you want to be somewhere on the spectrum in between. And I may be a little toward the former than the latter, but I am making a conscious effort to not be too extreme in either direction.
Yeah, I think that's the right idea, right? Again, nuance, hold two competing ideas.
No, exactly. Yeah.
The problem with being the gunslinger is that you can't ever truly assess whether your thought process was right.
That's where I think they really fall short, is that I don't think there's ever any, there's not as much learning in progress as there otherwise would be, right? Because it's so easy to convince yourself after the fact that the decision either worked or didn't work for some reason that just wasn't true at the time. And so if you're not documenting it and you're not diligent about it, I just don't think you make as much forward progress as you otherwise would. But there are plenty of people that, get far in life without doing it. So I'm not dismissive of it.
It's kind of like the spectrum from a George Bush kind of thinking from the gut and becoming a librarian, which is not the purpose of things either. I think we do need to acknowledge the time we live in and how easy it is to find information that we need at any moment. So we have, pretty much all the world's information at our fingertips in a lot of ways. And that's different from 30, 40 years ago, where you really did need to keep a lot of things because you may not find them again. So that's kind of the trade-off that I try to make, is just the time investment in, filing away things that, will be obviously easily accessible versus kind of just Googling them again when you need them. So I feel like, with my note-taking, I'm just really focusing on the context and the connections and things that I can't Google, frankly. So things that, stuff that I'm thinking that's important to me that would get lost if I didn't file it. But anything that can be Googled, I kind of don't really have it anywhere.
That's such a powerful point, John. I've thought about this so much. When I was a kid, I memorized the Encyclopedia of Hockey, and I could tell you who won the Art Ross Trophy in 1972. I can't remember that now, so don't test me on it anymore. But, I had to memorize things. I memorized phone numbers of everyone important and all sorts of stuff, right? And, my dad would say I memorized way too many unimportant things, but that's neither here nor there. But, instead these days I've focused on remembering pathways and remembering how to access and find things that are of value, more so than, obviously still remembering plenty of things as I can. But, I think that's the nature of the computer and our phone as part of an outsourced brain. And we live in symbiosis with it in contrast to, merely having it as a parallel tool. And that's really different. And I think, if you fast forward, humans evolve ever so slowly, but I do think it's going to have evolutionary impacts on how people think and operate. And, it's kind of weird.
It has to, right? Yeah. It's fascinating because I think that's the difference between just even a relatively short generation. We didn't grow up with that access. You had to memorize that kind of stuff. Even if you had a hockey almanac at your fingertips, it was a clunkier process than shouting out to Siri or Alexa or just looking it up on Google, right? So it's definitely, and some of the psychological research about how it does shape the malleable part of your brains is really fascinating. I don't know what the implications are going to be for that in the future, but you're right. We'd be foolish not to incorporate that into our investment process. And John, I mean, to your point, I used to be way more of a pack rat when things were scarce, right? I mean, I'm old enough such that 10 years ago, even, it was relatively harder to find something like a quarterly earnings call transcript from 3 years ago or something, right? And now you can put your fingertips on it anytime you want, your eyeballs on it anytime you want. So, I mean, I used to be super diligent about saving down all that stuff or printing it out. And now it's like, if I take the time to really read something in a detailed way, and particularly if it's something a little more permanent rather than something really fleeting, like a quarterly earnings call, then I will devote some time to it. But otherwise, yeah, I mean, just it's always going to be out there floating around. So you don't need to really be quite as diligent in cataloging it.
Yeah, I mean, nowadays you even have archive.org, which basically will show you past versions of a website. So even stuff that's not supposed to be found can still be found.
Oh, it's there. Yeah.
That is a great research trick and tool, by the way, using archive.org. That is one of my secrets. I love it. You could find out a lot. You could see the evolution of what's important for companies by seeing what their website looked like at different points in time. And you could find when certain like pathways or products were launched from companies even before they got launched publicly by searching if it made its way into archive. Also, you could find any Grateful Dead concert ever recorded. So that's pretty awesome for me.
Yeah, sorry for spilling the secret, but I mean, it's just how far we've come as a civilization. I mean, I remember as a kid, I was literally cutting out articles from the newspaper and gluing them into a book that I was keeping.
A scrapbook.
Yeah, scrapbook. And these days, so we've lost a lot, but we've gained even more.
Early COVID, I was with my daughters, especially the 6-year-old. We did scrapbooking as like just an activity because I do think it's fun and it's a good way to kind of like cement things in your brain. The more physical and the more like engaged you get with the substance and the material, I feel like the more etched it gets. So we do lose something in not doing that anymore. But yeah, 100%. It's kind of interesting to think about how different it is now versus then and the good and the bad that comes with it.
All right. Well, guys, thank you so much for another great discussion. I hope everyone listening enjoyed it as well. Talk to you guys next week. Take care.
Thank you for listening to This Week in Intelligent Investing, brought to you exclusively by MOI Global, the research-driven membership organization. Learn more at moiglobal.com.